Amazon began layoffs expected to impact 18,000 employees.
The company's CEO says several units will be impacted, including Amazon stores and its human resources department.
I wasn't planning to make this video about Amazon, but the company is really in big trouble right at this moment. And yet nobody knows if Amazon is still that flexible and agile company to make necessary changes and prevent the big downtrend it is facing right now. Recent reports indicate Amazon has been laying off staff left and right, experiencing extremely poor stock performance and closing its brand new warehouses worldwide. I will take a look at the facts and evaluate what this could mean for the company in the future. Let's be real, Amazon is losing money without good return on investment as it used to be. It has been 2 years post-pandemic and most consumers have returned to their pre-pandemic purchasing patterns by shopping in physical stores. The largest online retailer in the US has spent the year 2022 adjusting the dramatic slowdown in e-commerce growth. Due to the sales decline, rising costs, and an increase in borrowing rates, Amazon shares have dropped by roughly 50%. Is it a bargain stock price to buy? Maybe. Or maybe there is even bigger chance for the stock to fall from that. As of early 2022, e-commerce activity began to slow. This was the result of the continuing impacts of broad-scale inflation, heightened fuel prices, and rising energy costs, which affected Amazon's sales growth as consumers assessed their purchasing power and organizations of all sizes evaluate their technology and advertising spend. This was made known to the public by Amazon's CFO, Brian Olsavsky. The company has also found itself saddled with too much space versus our demand patterns. According to information gathered by Bloomberg, co-founder Jeff Bezos has experienced a decrease of $89 billion in his net worth. These decreases also affect more companies than just Amazon. Just for a perspective, the top 5 US tech companies lost a combined $4 trillion. Yes, $4 trillion in worth this past year alone. This loss is greater than the total GDPs of Turkey, Argentina, and Switzerland, to put it in context. Okay, so Amazon is in big trouble, but how bad is it really? Well, Amazon, like the rest of big tech companies, had a really rocky 2022, as they were affected by macroeconomic headwinds, soaring inflation, and rising interest rates. Amazon's major retail business was hit really hard as consumers returned to shopping in physical stores. Amazon reported its third quarter earnings on October 27, 2022, and its shares plummeted by 13% in extended trading on October 27th, and between October 25th and November 3rd, 2022, tumbled down to 26%. On November 9th, the stock fell 4.3%, bringing the company's market value to $879 billion, compared with the record close of $1.88 trillion in July of 2021. And Amazon became the first public company in the world to lose $1 trillion in market value. Looks like Tesla and Amazon are competing in the wrong race with each other. Aside from experiencing loss in market value, Amazon experienced another hit when over 25,000 warehouse workers across 40 countries decided to go on strike on Friday, November 2022, which just happened to be Black Friday. And that is literally the busiest day of the year for online e-commerce companies. The campaign was called Make Amazon Pay, and the workers charged Amazon with overexploiting its workers, communities, and the planet in the face of the cost of living crisis, and they demanded better wages and working conditions. The workers' charges include Amazon's attack on workers trying to organize in trade unions, high level of surveillance in warehouses to speed up work, and workers not having break times. And you know what I think? Amazon better improve its labor practices before things get even worse. Amazon is a big company and it employs a lot of people. But on Wednesday, the 4th of January, a memo was sent to the staff of Amazon where the CEO, Andy Jassy, announced that the company would be eliminating 18,000 roles, with most of the layoffs coming in the company's Amazon stores and People Experience and Technology Solutions divisions. Jassy wrote that the year's review has been more difficult given the uncertain economy and the fact that they hired rapidly over the last several years. Although most of the company's 1.5 million employees work in warehouses, the layoffs have been concentrated in Amazon's corporate groups. The layoff decisions, which Amazon will communicate starting January 18th, will largely impact e-commerce and human resources organizations of the company, according to the CEO's memo. The company began its current round of layoffs in November 2022 after Andy Jassy announced that Amazon would eliminate roles in the company's devices and books businesses and even offer voluntary exit offers for some of the HR staff. There are also rumors that the Amazon robotics team might be completely laid off very soon. The cuts will amount to 6% of Amazon's roughly 300,000-person corporate workforce, and this represents a swift turn for a company that recently doubled its base pay ceiling to compete more aggressively for talent. Amazon is really experiencing some troubled times. This is the largest group of layoffs at a major tech company in recent months, according to various reports. And that's not all of Amazon's big problems today. Amazon went on a building binge between 2020 and 2022 and added a lot of buildings to its network as it raced to keep up with the pandemic-driven surge in e-commerce demand, as millions of people were stuck at home. The company's footprint doubled from almost 272 million square feet at the end of 2019 to over 525 million square feet at the end of 2021. The company responded to rising expenses by tightening its belt and aggressively cutting costs. Just like Walmart, Amazon is paring back its warehouse footprint across the country. Aside from shutting down warehouses, the company also closed its modern locations, downsized its workforce, and abandoned several of its expansion plans. Ouch. Here is a breakdown of several operations that have been or will be shut down by Amazon. 6 of its Whole Foods grocery operations are being scheduled to close down out of the 500 locations across the U.S. Amazon has also announced that it is scrapping its plans to build dozens of new warehouses across the states. Reportedly, 71 warehouses have already been shut down in 2022. 68 retail stores have also been closed by the company, with 66 of them located in the United States. This has brought an end to Amazon eBooks, 4-star, and pop-up shops, which sell a range of electronic gadgets. The retail giant has also canceled 44 facilities and delayed the opening of 25 sites as of January 2023. After rapidly expanding during the pandemic, the e-commerce giant has closed more than 20 logistics centers while canceling or withholding plans for nearly 50 more. Even though Amazon is trimming its physical footprint, it continues to open new facilities in some markets. In July 2022, the company received approval from officials in Niagara, New York, to build a 3.1 million square foot warehouse. It is also building a site in Loveland, Colorado, as well as a 4 million square foot warehouse in Ontario, California, its largest warehouse ever. However, it's a matter of time before those facilities will get canceled. When big companies are in trouble, what do they do a lot? The answer is change leadership to the one that made it successful. You've probably heard about the news of Starbucks and Disney begging their ex-CEOs to come back and help them to correct the situation. The same thing could happen with Amazon. In his 10 financial market predictions for 2023 list, Michael Batnick forecasts that Jeff Bezos will retake the reins at Amazon this year. Jeff Bezos has spent 27 years at Amazon and has been gone for less than 2. Most financial analysts believe that Bezos will return, mainly because of the poor performance of Amazon's stock, which has tumbled 50% over the year 2022. On the same note, Amazon's billionaire founder Jeff Bezos recently shared an ominous warning in December last year, telling consumers and business owners that the general economy is approaching hard times. He advised people to start holding off their purchases and save money to be able to survive the downtime. He advised that this may not be the right time for workers to spend their annual bonuses, especially on extravagant purchases such as cars, large-screen televisions, luxury goods, and etc. I will tell you that he is absolutely right on this one. According to various reports, Amazon intends to introduce its new Buy with Prime service to all other smaller-size e-commerce websites in the US. This can allow those online stores to use Amazon's fast and efficient supply chain infrastructure for deliveries. At the same time, Amazon can make a lot more money from this partnership and keep the warehouses busy in this slow economy. Aside from developing new profit avenues, the company also intends to introduce its latest technology innovations with subscriptions like Ring, expanding its product line with dual-facing car cam and introducing voice AI for cars in 2023. Speaking of AI, I am working on a video about how AI robots are going to change the world forever, and who is going to benefit from them the most. See you in the next video. Thanks for watching.